And over in Egypt, the banks have begun issuing certificates of deposit at an all-time high interest rate of 25%. The move follows the Central Bank of Egypt's decision to devalue the Egyptian pound against the U.S. dollar for the third time since March last year. The Egyptian pound has lost more than 60% of its value against the greenback over the same period. With the details, here's Yasser Hakim in Cairo.
The Egyptian pound couldn't sustain the impact of the shortage in hard currency revenue, the exit of hot money from the economy, and hike in import bills caused by the fallout from the coronavirus pandemic and the conflict in Ukraine.
Egypt's problem is that there is huge demand on the dollar. Continuously importing basic commodities and goods increases demand on dollars and leads to further devaluation of the pound.
The result is the local currency has lost 100% of its value against the dollar since last March. The Central Bank of Egypt, along with state-owned banks like the National Bank of Egypt, have taken measures through the financial sector to protect the Egyptian pound. The measures include import restrictions on luxury goods to reduce demand for hard currency. Certificates of deposits with record-high 25% interest rates were also issued for Egyptians.
The reason for the certificates is to encourage hard currency holders to exchange it into higher-yielding Egyptian pounds, so to create more dollar supply. Another reason is to increase savings in banks to control inflation that has reached 21.5%.
The certificate of deposits garnered an equivalent of about $9 billion of local currency deposits in its first week. But this is a double-edged sword.
Certificates can achieve public satisfaction for helping maintain the Egyptian people's savings with its high returns. But on the other side, it will create market recession because it limits consumption.
There is hope tourism recovery could restore hard currency revenue. However, experts are calling for more sustainable solutions to this crisis.
Solutions should all be related to strengthening industrialization and manufacturing to replace imports with local products. A weaker pound makes Egyptian exports more competitive and creates more dollar revenues.
This is a short-term strategy, and that's why most analysts predict the Egyptian pound might drop further, at least during the first quarter of 2023. Yasser Hakim for CGTN, Cairo.
Uganda has signed a memorandum of understanding with a